Hi, this is Randy Finney with Right Side of the Chart, and this is an early session update for Wednesday, August 20th, 2025. It's 9:08 Eastern Time as I'm starting the video. And what I'm going to do in this one, it's going to be part one of at least two videos today. I've spent the morning going over the all charts of the Nasdaq 100 components, every single one in there. And what I did is had two columns, kind of a short list and a long list. It right now, and it has been lately, a bifurcated market. Again, if you've mentioned this recently, some criticism about the market. Randy keeps shorting the market and losing money. QQQ, which has been my main focus lately, again, is one of dozens and dozens of trade ideas put out, every year on the site. I'm always going to track the markets, give you my 2 cents, where I think it's going, targets, setups, buy breakouts, breakdowns. And then again, if you're taking the majority or any of the longs on the site, you're vastly outperforming the stock market. Even if you're taking what I do personally, I can't make recommendations to you or any individual investment advice. I'm just telling you that's what I do. This site is more of a kind of, hey, what I'm doing, what I see, the way I see things, and that is to until we're in a environment where we're clearly when we start taking out the long-term sell signals start to trigger, we're back below the 200 moving averages and all this. I'm going to continue to trade a long-short portfolio, especially in this market. And now the market, you might say, well, the market's been clearly going up. Why not just longs? Because what most of this is, as I pointed out, are AI stocks and those related to AI, mostly tech stocks. It's due to gives the market a false guise of strength, of performance. The broad market is up, I think it's less than 10% year to date. So remember, we were short in the beginning of the year. We milked that thing down with impunity to the lows, April lows, hard long, reverse, cover all shorts, went long up, gained the the first part of the bounce up to the 200s. And since then, the trade ideas on the site have been a mixture of long and shorts, probably as many, if not more, longs in the last couple months here, last 2-3 months than we've had on shorts. Again, individual stocks. So what I'm going to do in this video is cover the longs. I'm going to start out, as I like to do, with just a brief overview of the market and reiterate that the sell signals that we had recently that I highlighted, and that's the breakdowns of these minor trend lines right here, have only been built upon. So we're we're now several days into it. Every time when you get a breakdown, especially in a resilient trend, you get a lot of whipsaws. So believe me, this is not the first sell signal that I've seen on QQQ in a while. But what is different about this one is I've seen quite a few just this week or last week, in the last week or two, the market leading mag 8 or 10 stocks. And you've heard me say, or if you've not been following, going back for months now, I said until you get the majority of those top 10 holdings in the Nasdaq 100 breaking down, not one, not two. Apple was weak first and now it's catching up. But when the majority break down, that's when you're going to have a higher probability sell signal. We have not seen that for a long time. So we've had little here and there trendline breaks on SPY or QQQ or ES or NQ. But this time around, like I said, you've got a pretty decent sell signal. That is a very well-defined cleanup trend line on the daily chart. Here it is on the 60-minute chart right there. Again, it's been highlighted for a while now. Then we took out this first support level there, and we're now down to that first target I've given you on the 60-minute chart, 567, and you can see all the other support and resistance level. This right here, I'm going to color it up right now for you. This is what I believe will be the lights out level. I do that often. The last time, I could be wrong, but I believe the last time I gave you what I referred to as a lights out level was shortly before, in the days, a couple days before, or 3-4 days, a week, but definitely leading up to when Trump stepped up to the podium on what he called Liberation Day, what I and others have called Liquidation Day. And boom, right in the after hour session when he stepped up the podium, that level was taken out, and I said, boom, we hit it. And that was, again, if you remember, if you were trading, here or elsewhere, That's where the bulk of the drop came from this year. We were already short going into there, but then this was, I think that was it right there. So that was the last kind of lights out level I gave you, and it was taken out then. And there was a huge profits to be made on the short side, and even as big or bigger profits covering those shorts there, which clearly posted on April 5th, the morning of the lows. No more shorts, all longs at this point based on the factors that cited. So there's where we're at, and I'm going to give you again that lights out level, and that is, let me turn the other line off so I could see better. Delete that one. I'll get to the long trade ideas in a second. About 550.88 is where it shows right there. Again, I think it'll do the trick near term. Now that's near term. That's a 60-minute chart. I've given you, this is going back at least a month. I've given you some near-term swing targets, which I still maintain, T1, 2, and 3. T1's a zone because there's a confluence of support. I think it's a big level. I think when that's taken out on the daily chart, again, I'm speaking time frames here. This is longer term, bigger implications. That's a really nice level. These were all-time highs in the Nasdaq 100, and we tested. You can even see the boxes. Remember back here, I highlighted, again, if you've been following me for a while, the markets were in a trading range that I expected to break to the downside ultimately, even if I said if it breaks to the highs, I'm not chasing it, it'll probably fail. It did. We had a marginal new high, especially in the S&P. It might have been roughly equal in the Nasdaq. And it failed, and we went down to, and then ultimately below the range, and that was a powerful sell signal as well there. And then, so that's a very significant, technically significant range. Again, I know this chart's busy, but you can see the boxes. I'm going to just box them in here. Then we came back, we tried, once we took it out, we took out the 200s, we got rejected on the back test, then we tried, and popped the 200s, and that was where, at the time, I said no more shorts above the 200. That's the no-go zone. We popped above it, took out the 200s, and then we set up another trading range in the same range, and then we popped it right here, and that's taken the market to new highs. So again, this analysis can be interpreted one of two ways, whether you're glass half full or glass half empty guy or gal. Glass half full being, bullish, I think market's going to go new highs, but you don't want to chase right now. Things are getting frothy. We're due for a healthy correction. That's a great area to buy. It's my first target zone. And if you want to wait to, get into some longs there, if you believe this market's going to go to new highs and beyond, then that's a great place. Otherwise, if you are glass half empty, you want to see that taken out, then you have these near-term targets. Remember, T3, which is currently the final near-term swing target, will be a back test of the key 200-day moving averages. If those fail, we're going to start to go down, and then we're going to take out those, if that $500 level is the base of these trading ranges here. And if that gets taken out, as I've said, the odds for my longer term targets on my weekly chart, which still calls for a 50+% drop in the Nasdaq 100, will increase exponentially if and as QQQ drops down below this zone. So what I have are shaded arrows, with the, they get brighter as they go down, and then boom, that's kind of my long-term trend swing, year plus time horizon, lights out level, if you will. So let me just color that up and I'll move on. And again, I'm going to get to the long trade ideas for you here, and I'll do the short trade ideas in a separate video. So that's what we're looking at, kind of if you want to near term. Remember, this week, as I said, a lot on the economic calendar, including today. Fed minutes coming out at, I think, 2 p.m. today. You've got Powell talking on Friday at Jackson Hole. You've got some employment data coming out, I think, tomorrow. So there's a whole lot on the calendar this week, and the market's kind of wobbling around as I expected. It's not really, you can see. This is the NQ Nasdaq 100 futures using 2-hour candles, 6 months of price history. That was the most recent sell signal right here below this trend line. Same thing I just showed you on QQQ. And that's coming off that big divergent high. Let me just pull that line across like I do. These divergences, again, are still very much intact, or were intact at the highs. And now we're starting to move lower. There's that significant level right there, I think, and I colored it yellow for you. 22, I have it at 22,749. We'll call that 22,750 on NQ for your NASDAQ 100 traders. So this is just a whole mess of low volume trading, summer doldrums. Then that I think I feel confident based on the read on this chart. If we take that level out, you can have a lot of stops on long side traders, a lot that chased. And again, we've been kind of slowing down. That's what momentum indicators tell you. This was the juice right here. That was easy money to be made. We consolidated, we broke out, but that breakout's kind of stalling out. And that's where we're at. So either way, that's a level. It's both a near-term pullback target. Again, guys, if you're glass half full, I know some are here. That's a great level, in my opinion. If you think the market's going a lot higher, to buy some longs, you can always have a stop below. Stops are going to be commensurate or relative to your price target or targets, wherever they are. So, I wouldn't put a super tight stop. The powers that be tend to pull out see those clean support levels. They know, as I've talked about, if you've ever wondered why in recent years Schwab and Fidelity and E-Trade, everyone went to free trades, well, guess what? Because they're making money, they sell your data flow. And so they know exactly where your stops are, and they'll go in and take them out. So I like to always put my stops a little bit out of range where I think the mass majority of stops are. Even if that gives me a lower RR ratio. I've shifted over the years. I used to use it usually minimum 3-to-1 RR, and in recent years, quite a few trades, I'll go to a 2-to-1, and I find out that, you're going to take bigger losses on the drawdown if your stops are wider, but I get stopped out a lot less than I used to. Again, it's been evolution over the years, and I can just kind of see and know where those stops are usually run. And then I want to put my stop loss just out of range of that. And over time, it tends to work out. Again, every trade, every position is different, every stock. All right, so there's NQ. ES, the S&P 500. This is also a 6-month candle, 6-month history, 2-hour candles. And this is the most recent uptrend line right here. Again, we've been wedging up. We've had a series of uptrend lines. But all along the Nasdaq 100 or the S&P 500 futures have been diverging, meaning making prices making slightly higher highs, with the indicators making lower highs, and that's negative divergence, and that typically precedes trend reversal. So there's a sell signal, and it's not a one day. We have several days here. Nothing big so far. You can see I'm going to add one support level here that I missed, and I need to add right now, right there. That is both a price target. If you're looking for a pullback, it would give you another about 2.9% drop, almost 3% in the S&P 500 futures from where we're at now. And that's 62.36 with my next target there at 61.22. And I don't see any reason why they won't be hit. That's what I favor right now. As I mentioned, we got these sell signals recently. It's just not with everything on the calendar this week, not an all-in moment. I think you're going to grind around a little bit. We'll see. But either way, those sell signals are there, and they're still intact. All right, now here's what I've done. We're going to go into the trade ideas. I think I already covered SPY for you. I know I just covered the futures, but let me cover SPY real quick, and then I'll get to these trade ideas, because I have a lot fewer on the longs than I do. There's the breakdown in SPY, 60-minute uptrend line on SPY. We're kind of in no man's land, very minor, but yeah, I can put a line there. Sure, why did I do that? Not just because where we're at. Reaction high, reaction high, reaction high right there. And so that's minor support about where we're at now in pre-market, about 639. And so, if they bounce it up, there's your next resistance, 642.28. And that would be an objective add-on, or if you want to be short right now, new entry. As would also a solid break below this support level take you down to these next support levels and targets. And then this is the big level here, kind of the near-term 60-minute lights out level, and that is at 619.66 is where I have it on SPY. So you can set those. I'll set alerts right now, and we'll move on, give you your trade ideas. And I made clear my thoughts and with the recent sell signals and everything. So I'm going to give you these long side trade ideas. I'm going to tell you, I'm trying to set an alert. I keep clicking on the wrong thing here. 1 second. Trying to walk and chew gum at the same time. Okay. All right, there it is. So alert set for me on those two lights out levels on the Qs and SPY. I'll let you know if and when those trigger. All right, so let's dive into it. Now, what I did today, again, I went through all the components of the Nasdaq 100, and what I came up with are 24 stocks that I think look good for shorts. Now, I'm going to expand on that. Some of those, I post two type of trade ideas on this site. I post trade setups, which have not triggered an entry. I cannot make a case to be short at the time or long. Those are trade setups. They are pending break of a bullish or bearish chart pattern and price resistance or support to trigger an entry. That's a trade setup. And then I post actionable trades that have already triggered and are objective data on, maybe on a bounce back to resistance or pull back to support, etc. And so the 24 shorts that I'm going to cover in the next video will be a combination of both. And then I'm going to cover, and just to kind of put in perspective, I have 9 long trade ideas. That's why I'm covering the markets and spending a little time here first, because it doesn't take that long to cover 9. I also want to say that some of these are just kind of okay. I'm not crazy about all of these, both on the longs and shorts. It just kind of, when I go through, and that it's typically what I'll do. There's 100 stocks in the Nasdaq 100. And so what did I come up with? 33 that I have a decent opinion on. And that's normal. And you guys know that. You'll ask me my opinion on things, and I don't force opinions. If you ask me for my 2 cents on a stock or a chart, if I don't have an idea where it's going or a good read, I'm going to tell you that. And that's the case. And, I look at 100 stocks in the Nasdaq 166. I have no idea. I flip a coin if they're going to go up or down from where they're at now, in the next, when I say that, I'm projecting out, let's say the next 10% move, a swing trade. So there we are. I'm going to get into these. And I'm also going to say that based on my outlook on the markets, going over these longs, some of them I might take, but most of them I wouldn't. Right now, I'll tell you each one. Let me just get to that. Each one I'll treat different because some look better than others. And I'll do what I tend to do is gauge which ones I like better. I'm going to start out here in no particular order. It's just how I wrote them down. When I go through the lists, I typically go through an order of market cap. So keep that in mind. Usually these the bigger market cap ones are up front. This is Adobe. And what I see on Adobe, you can see my chart. I'm followed, this is a component of the Nasdaq 100. You can see all my notes in the past. These are old notes. Divergent high, bearish engulfing candle. That was followed by a drop of 37%. Trading range there, we broke out big divergent high, very overbought, and the stock dropped down about 61%. I point this out because I make a lot of terms up in trading. One of those is know your security rule. As a former stockbroker, financial advisor, was bound by FINRA with the I forget the rule number now, but it was the know your client rule. You could not make a recommendation to your client if you didn't know their risk tolerance, their investment objectives, what other investments they had, whether it was at a different broker. Because you don't want to overlap. You don't want to put them too heavy in stocks, bonds, cash, whatever. And so I say know your stock rule. That's my thing. If you're going to trade something, know, for example, what are the trends? Are they, when it corrects, are they typically 10, 20% corrections? Or are they 60, 70% plus corrections like a lot of tech stocks? What does that stock do around earnings? That's easy. I don't know if you can see it here. I have little earnings E's toggled on. And you can see Adobe, if you look closely, that's a huge gap. There's a huge gap down, a huge gap down. Of course, that's in a bear trend. Same thing on the way up in a bull market. And you can measure those. And guys, do this. If you want to be a better trader or investor, get to know it. Because if you hold a stock that has a history of gapping up and down 10, 20% in earnings, and you're not aware of that, and you go into earnings with a big position, you're either going to be very happy or very pissed off after they report. So again, that's part of know your security rule. I do my best to try to convey or point out these things when I share these trade ideas. But again, it's easy to do, and you can just eyeball a chart. You can just eyeball it here. There's E right there, earnings, they reported. The dang thing gapped up 15%. E right here, they reported. I can't grab that line. And the stock gap down about 8%. There's probably a 10+% gap down. Okay. All right. So that's that. What I have here, I'm going to borrow this, or I'll just make a new note, and I'll move a little faster on the rest of them. I just wanted to point out that kind of trading tip, if you will. So this is a divergent low, and it's at support. This is line right here. I've created that line back in 2023. You can see why I have that line there. There's a massive gap right here. There's the bottom of the gap. It tested that gap, then it broke above it, and it tested it. Resistance, once broken, then becomes support, with support, 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 and support. It's a big level, in my opinion. So I wish I would have saw this stock about a week or so ago. You know, it's had a nice bounce off that support, but it's just coming off a divergent low. And so if you're looking for a long now, is it an objective buy now? No. Why? Because it's right at downtrend line resistance, just a hair below it. If it can break that downtrend line, that is one of the better looking stocks that I see right now. However, it breaks that. Remember, if the market is going much lower, then this is just the start of a new, larger bear market. Again, the stock has already dropped 50%. So if you're out hunting and you don't want to chase NVIDIA, which has nosebleed levels right now and valuations and everything else and a lot of hot money in it, and you're looking for bottoming plays because you're bullish, this is one of the better ones. Where to? Maybe a bounce back to the 200-day moving averages. Again, if you're interested in any of these and you want me to sharpen my pencil and give you targets, let me know. So your objective entry points are a pullback to support, even if it makes a marginal new slightly low. I wouldn't buy it if it breaks 328.47, but I would buy it if it broke it and then quickly recovered it and gave you a little wedge here, or on a breakout above the downtrend line. All right, so that's one. CMCSA, Comcast, the company everybody loves to hate. I personally have them, and I don't have many options where I'm at for my internet, but as you know, their customer service sucks. But either way, the chart looks better than most. Again, this is what I've told you recently that I'm comfortable sharing and personally taking, and those are bottoming plays of blue chip companies. I'm right now staying away from the dash to trash, especially because the market's starting to crack. Again, we had those recent sell signals, not just on the market. In the next video, I'll update the Mag 10. I already moved away from the markets and show you that it's not just now, like it has been for the last couple months, SPY or QQQ breaking a minor support line like it did just recently. I have probably the majority of the Mag 8 or 10 stocks breaking. Either way, Comcast is coming off a divergent low. Divergence is not a buy signal. I would like it a lot better if it was at support. I don't really see much support here. There is a reaction low from right here back in 2020, and it is on that level. So yeah, okay, there is some support there. And so that's it. So either way, positive divergence. In a bear trend, keep that in mind. And if there is a much larger bear market to come in the coming year plus, that I believe there is, you can just trade this. They're good for bear market rallies. That's usually what divergent lows are in a bear market. Good for bear market rallies, not positioning for moves to new highs, right? I do not expect any of these stocks that I'm covering right now to do this. And I may be wrong, and that's, again, why I do this. I know there's other people on the other side of the market right now and seeing things different from me. And these are your trade ideas. That's my job, is to provide trade ideas, and your job is to decide what stocks or ETFs or commodities or crypto to take and which ones to pass on. Well, that's not what I meant to do. REGN, Regeneron. Okay, so on this one, I have a nice downtrend line off the highs. Here's a stock again. You want to buy, this company's been around forever. It's one of the bigger biotechs out there. 60% drop. You're buying a stock 60% off its recent highs. Not solid support, but either way, it's already come off a big divergent low. This was positive divergent. That line should really be carried out to here. And then it broke out recently. So it is technically an objective long, although you do have some gap. What I'm adding right here is gap resistance. See that was the top of the gap. It gapped here. It's coming up to that, but either way, it's broken out and it's been moving higher since it put in that divergent low. And again, beat down. How much downside left? I don't know. And again, guys, I haven't done fundamental analysis on any of these stocks. That means do your own due diligence. Go to Yahoo Finance or whatever your favorite source is. I can tell you this one has broken that primary bull market uptrend line. I probably highlighted it back here as a short. These are old levels. I had that divergent high mark back in 2024, right before it broke. So yeah, I probably highlighted that as a short, and you can see what happened. This is what's going to happen to the stock market at some point in the not so far future. It's going to go back down below the 200-day moving averages. Those are these blue and red lines that act as support in a bull market. Then it's going to take out a more significant bull market uptrend line, and then a bear market will be underway. And that's what we had here in this one, certainly. And you can see it's just well below the 200s. Targets, when you get into a bear market, guess what? It's like a bull market in reverse. Bull markets, you buy pullbacks to the 200s. Bear markets, you short rallies into the 200s, or you ride those bear market rallies and then take profits on tests. We haven't even tested the 200s, not even once, not even close, since we lost it there. So this stock's very oversold, and probably wants to come back and check those 200s. There's really good support. If it takes another leg down in the bear, 441 right there. Really nice long-term support, as you can see. All right, moving on to the next one. Again, there's only 9 total, so we're almost done with this video. TEAM. Story on this, positive divergence at pretty decent support. I'm marking why it's support. There's a gap there, reaction there, and a gap, reactions there. And that one's at support. So this one is actionable here. Again, if it's your cup of tea, stops somewhat below, somewhat a little out of range of the stop rates. And it's kind of, it doesn't excite me. It's been choppy. Looks like an irregular EKG. But again, I'm just pointing out the ones that stand out to me as more bullish than bearish, or at least potential setups. KHC. God, I guess the last time I gave you this one, we shorted it back here. Short entry triggered on the break of this bearish rising wedge pattern. And this stock has since then fallen to the recent lows about 40%. I know we had a long trade idea on it back here a couple of years ago. Every now and then this one pops up on my radar. Divergent low. I don't have great support. It's below the 200s. This is bear market action. But positive divergence, maybe if it takes out the 200s, or you take it here if you're just looking for, again, beat down blue chip stocks that, have better risk reward profiles than, the NVIDIAs of the world. All right, next one up, ODFL. Trucking stock, Old Dominion, Freight Lines, Freight Lines. Downtrend line right there. Positive divergence right there. Support-ish, not great. These are the stock splits. That's what these crazy lines are over there. But you can see this one trades well with the technical. We have a textbook bearish rising wedge with a divergent high, and then double top there. Extended. That's actually an extension of the same divergences as what that one did. And there it is. So I haven't updated the chart really. I just eyeballed it, noted that divergence at support. Again, not one I'm taking now or anytime soon, but for those of you interested, maybe you think the trucking sector is due for a bounce. DXCM, Dexcom, nice positive divergence. It's in this range here, so basically you can ping pong it. There's resistance, also potential price target. If that level's taken out, massive gap right there. They will want to backfill that gap and take it up to 108. So buy point, you can also buy it here. This is support right there, support right there, or resistance, I should say, resistance, broke it. So you buy it off of right about where it is, 70, above that 76 level. And those are your 2 targets if interested, again, coming off that divergent low. Might even have a little trend line off the highs too. Might want to try to pop and run if it can take that out. 2 more. Lulu, that's actually an active trade idea. I've shared this one with you recently. It still looks constructive. This is Lululemon. the brand name. And most recent update I would have given you on this one, I believe, a couple of weeks ago, was this downtrend line would trigger a buy signal. You still have the divergence. We had a divergent low there. That's where I first gave it to you. On a break of this trend line, we hit my first price target, had a reaction as expected. Been a little bit deeper reaction than usual, but it's still positive divergence. And it just broke out of that trend line I gave you back a couple weeks ago. Breakdown backtest. It is objective right now because it is backtesting. Those are still your targets there. So there's Lululemon. It's coming up to report soon. You can see estimated earnings right here. So this is your earnings on or around the September 4th. So just keep that in mind. Taking it now means you're probably going to have to hold it into earnings. Stocks usually kind of go into a holding pattern right before earnings. So I wouldn't, if you buy it today, just plan on rolling the dice. If that's, and again, know your security. Again, the charts are constructive. You want to ask my opinion? Which way I think it's going to go after earnings is up. I wouldn't mention it here. It can certainly go the other way. It's in a bear trend, but based on my read on the charts, it's one's due for a reversal. mRNA, Moderna, old vaccine stock everybody knew during COVID. Just broke out of this downtrend line right here, right there. It's been moving up. Hit that first resistance level, 35.51. There's an uptrend line you can buy up to and maybe have a stop somewhat below it, and or add on a break of 35.51. And that's it, guys. I'm going to wrap the video up here. I will do part 2. I'm going to cover in the beginning. I already gave you the markets, maybe a very brief update, because some people want to watch this video. I don't know. Some people are going to see long trade idea video and say, I don't want that. So maybe I'll do a brief overview on the markets, hit on the Mag 10, and then to show you that how many have broken down recently. And then I have 24 shorts that stood out in the Nasdaq 100. So again, that gives you kind of the idea, about 3 to 1. When I look at the charts, 2/3 I didn't have much of a read on of the Nasdaq 100, roughly 2/3 of the stocks. And then of those that I did have a read on, which was a total of 33 stocks, about 2/3 of those were bearish in my opinion, and 1/3 more bullish than bearish. All right, we'll wrap it up here. This has been Randy Finney with Right Side of the Chart. Have a great day.